Howdy there, folks, and welcome in. Look at this. It's a rare weekend video. Hope you guys are doing great as always out there. Going to go through 4 stocks I just bought yesterday. I'm recording this day a video on a Saturday, which, by the way, is going to have no edits in this video, so I hope I record this one clean because this isn't even going to be an edited video. But needless to say, NASDAQ was down, almost 1%. A lot of stocks were down a lot more than 1%. And I went shopping a little bit and bought a few different stocks. And I want to tell you guys why I bought these specific stocks and why I didn't wait on some of these, because obviously with some of these stocks continuing to downtrend, I think a lot of times the thought process goes to, well, what if I just wait? It might be cheaper next week. It might be cheaper next month and things like that. And I just kind of want to explain a little bit on why I'm making some of these moves now and not, deciding to say, well, what if I just wait a week? What if I just wait a month? What if I just wait 3 months? Things like that, guys. So yeah, anyways, hope you guys enjoy this as always. Once again, thanks for joining me. All I ask in return is that you smash that thumbs up button. That's literally it, guys. Appreciate you being here. We'll go through all 4 of these stocks here, okay? So first stock up here is Facebook. So this stock dipped big. The reason this one dipped big on Friday was essentially Snapchat came out with earnings the previous night. And Snapchat, their numbers were kind of rough. And they also mentioned some things around Apple's new privacy changes hurting the business model. Now, something important to keep in mind is Snapchat is not Facebook. Snapchat is a one-trick pony, and Snapchat's valuation got pushed to very, very high levels, okay? Those companies shouldn't even be compared. But needless to say, people still put them in the same categories on Wall Street, and so Facebook ended up dropping 5+%. Now, I decided to go ahead, pick up some shares. I bought $2,200 worth of shares on Friday. And my perspective on this is, in regards to Facebook stock, in the past 10 years, every single dip has been a buy-the-dip opportunity in Facebook. Now, you could say, well, maybe this time's different. Maybe this is the one time where it's not, and Facebook has topped or something like that. I beg to differ. Here's the thing about Facebook, right? Half the world pretty much uses at least one of their platforms. They own Facebook, they own Facebook Messenger, they own Instagram, they own WhatsApp, and they own Oculus. And Oculus is in the forefront of VR, AR. And so if I think about it from that context, this company's not going anywhere. They've been through so much drama over time, so much negativity, so many negative headlines. Like, it just is what it is. It just washes off this company over time. Every single dip is always a buy the dip opportunity in regards to Facebook. Now, also in regards to this stock, they're about to report earnings here in a couple days, okay? Now, could the stock go down on earnings? Absolutely. Every stock could go down on earnings, right? And so it's always a risk. Now, if it goes down on earnings, I'll buy more shares. It's as simple as that. So, like I said, with this stock, it's always a buy the dip opportunity. Now, the setup for this earnings is very, very different than the last earnings. So last earnings, going into that earnings, the stock was being a beast, right? It was running, and then the downfall started to happen here. And so it's a very different setup in going into this earnings. Expectations for this earnings for Facebook very, very low, which is obviously usually a fairly good. For me personally, I usually like it if my stocks have low expectations going into earnings. I don't like it if my stocks are flying high into earnings, because usually the company needs to report such ridiculous earnings beats that if they don't report those ridiculous earnings beats, the stock falls, right? And so in regards to me for Facebook, I feel very comfortable with this stock. If it falls and it gets to even a cheaper PE ratio, fine, I'll pick up more shares. Like, give me more shares. Like I said, when it comes to this stock, it's very simple. Like, in 2 years from now, I'm not even talking 5 years from now. In 2 years from now, is this a $500+ stock? Yes, in my opinion, it is. And so, being that in 2 years is a $500+ stock, I'm like, okay, I could put in money now, make $150, $200 back on my money per share I buy over the next 24 months. I'll gladly take that. And I'm very, very confident in this company overall. Obviously, they got a long track record there. So yeah, Facebook, first one up here, I bought with their earnings coming here. Okay, next one up here, Corsair Gaming, CRSR. Stock's been devastated recently, right? About $2,500 worth of that stock here. In regards to Corsair Gaming, this one's pretty simple. This stock has just been absolutely crushed. I mean, absolutely crushed by all these short-term headwinds going around the company, right? You have the worries around, well, they had a huge push for electronics products because everybody was at home last year. You don't have that now, so you have that negativity. You have supply chains messed up. You have chip shortages. You have freight cost, container cost, transportation cost. You have inflation. You have all these things hurting Corsair in the short term. And it's all a bunch of negative baggage for this company in the short term. However, all of that stuff is going to peel off this company over the next several years, right? If not over the next several quarters. And I'm looking at a company here that's innovating at a very rapid pace, that is coming out with products all over the place, and is a company that's, let's be honest, one of the biggest players when it comes to hardware in the gaming space and in the streaming space. And they just continue to expand in those and continue to innovate and come out with new products, right? I mean, this company with their Elgato lineup didn't even have a webcam in the past. And now they have a brand new webcam that a ton of folks love, and a ton of folks have done reviews for, and most folks love those cameras, right? And so I'm looking at Corsair Gaming. The stock's been just hammered. They already pre-announced negative numbers. So in terms of like, am I scared that the stock could go down more after earnings? Not really. Could it go down? Sure, all stocks can go down. That's always the risk we take when buying any stock, right? But when it comes to Corsair Gaming, like, okay, they already pre-announced numbers. So that's already baked in to the stock price, right? If they have anything remotely positive to say, it's likely going to be a boost to stock. If they just say something good about orders coming in the next month or something like that, like, or they got some new products coming that are going to hit, that are going to be big revenue drivers, or they got something they're starting to see as far as freight cost or anything positive, literally anything. When you are a beaten down dog stock and your valuation on a growth stock like this, right, is getting pushed down to, forward P of 15, 16, when you're in that type of scenario, you're setting yourself up for even the most minor good news can send the stock skyrocketing, right? And all of a sudden it's up $3, $5, $7 a share the next day. And so that's why in regards to Corsair Gaming, I'm just buying as many shares. If it falls, I'll buy more. If it falls to 22, if it falls to 21, whatever, okay? I'll pick up more shares. When it comes to this stock, I'm more scared that I will not buy more shares and it's going to go up to $30, $35, $40 plus dollars, where I think this is going over the coming years, and ultimately $50 plus. As far as downside, the downside is so limited at this point. I've talked about this in the past in regards to Corsair Gaming. $18, $22, those are always possibilities. Very unrealistic possibilities, but they're always possibilities. And below 18, I can't really honestly ever see it in regards to Corsair Gaming unless the company just completely fell apart, and unless that fund just literally dumped all their shares at one time and the market couldn't pick them all up fast enough. Like, outside of those very unrealistic scenarios, I don't see the stock falling much more. And so that's why I'm willing to pick up shares, and I'll continue to pick up. And if they fall to 22, dude, I'll pick up way more shares. So yeah, that's Corsair Gaming there, okay? My biggest buy of the bunch, I think, was this one actually here. Tattoo Chef picked up about $3,500. Now, Tattoo Chef's reporting earnings in a couple weeks. Let's talk about that. First, I want to mention this, okay? In regards to my bullishness around the plant-based food sector, this is something I feel pretty strongly about. In regards to not just thinking I'm going to make a lot of money on a stock like Tattoo Chef, but I think we've got a massive change that needs to happen in the United States of America for a big problem that no one talks about. People talk about global warming. People talk about, fossil fuels. People talk about gender issues and race issues. And we talk about all these different things that we need to get fixed in this country, right? But one of the biggest that no one ever talks about, people are real quiet about, and maybe it's because we feel a little uncomfortable on this, but look at those numbers, guys. That's scary. People don't realize how much this costs folks in terms of money and in terms of quality of life, right? We have, in my opinion, a health crisis in the United States of America, and in a lot of countries as well, but specifically in the United States of America, a health crisis that we need to dig out of. And I think a lot of these new companies are going to help us start to dig out of it in the plant-based space. And when I look at like Tattoo Chef's products, a ton of them are like 200 to 400 calories, which I think is phenomenal. I can tell you, since I went more plant-based, am I 100% plant-based? No. But am I mostly plant-based? Yes. And I tell you, I've gotten in way healthier shape than I was in the past. Let's just put it that way. And just trying to, watch my calories, make sure I'm eating vegetables and things like that, not just eating hot dogs every day or something like that, right? Because this is absurd. No one wants to talk about it. And so the money that's going to come to this sector, in my opinion, the plant-based food space over the coming years, is going to be absolutely massive. And ultimately, when you think about the traditional meat market and things like that, like those are going to be in a tough place. I'm telling you, like the amount of greenhouse gases folks say, you know, animals emit, right? And then you talk about this here, 42.4%. It's just, that's not sustainable. Like, you know, we're going to flip the other way, and we're going to flip in a massive way here because this is setting our society up for failure ultimately, right? This is even the saddest one. You know, I got kids, and some of you guys probably got kids. Almost 20% of kids, you know what I mean? Like, that's just, you know, that shouldn't be that way. It shouldn't even be close to that way. You know what I mean? Like, it's absolutely absurd. No one talks about it. No one talks about it because it's an uncomfortable subject. And you know, it's just, it needs to change. And it reminds me of some of my reasons to get in Tesla in the past. One of my biggest reasons to get in Tesla in the past was really not even on the traditional way. Like everybody that was really excited about Tesla was really excited about it from the standpoint of getting away from fossil fuels. That was never my big thing. My big thing about Tesla was always the autonomous taxi network opportunity and just autonomous driving in general. Because I think about how many people die on the road or are severely injured. I saw a bad accident coming back to Vegas the other day, coming back from Arizona, where this car just went right underneath a semi. The ambulances weren't even there or anything, and like the whole top of the car was gone. Like, I'm pretty sure those people got decapitated, or, you know, it is, I would say, less than a 1% chance they lived. And that's just something like really sad. I think about like how many people just die every single day in cars or severely injured, and something that shouldn't really be that way, right? And then I think about like these numbers here on just how bad we're setting up our society, and for just a health crisis, and it's disappointing. And this has to change in a massive way. And I think there's going to be a lot of pressure put over the next 5-10 years on food-related companies, on our diets in general, and the way we do these things, because let's be quite clear, we are in a health crisis. These rates have gotten so much worse over the past 10, 20 years. It's ridiculous. It's sad, guys. It's really sad. Never mind over the last like 30 or 40 years. It's disgusting. So anyways, Tattoo Chef, I think, is just a small player in that, but that's one of the reasons I'm really excited about this stock over the coming years, because I think it's going to be one of the biggest players and one of the biggest changes we've seen to diets in modern history, and I hope it's a change for the better. In regards to stock, let's talk money for a moment, okay? So in regards to Tattoo Chef, obviously this is one I could wait on, right? I didn't have to buy it, but here's the thing. Every single time the stock starts hitting $16, $17, it starts getting bought up real quick, and it goes on a spike. You look back to May, $16, boom, next thing you know, it's 22 plus. Then falls back down, gets bought up right before earnings or right around earnings time, boom, huge spike down to $15, $16, huge spike up. Now it's had a slow bleed, right back down to $16, $17. What do you think's going to likely happen from here? You know, maybe it goes the other way and it goes down to 14, 13, 12. I don't know. You know, I'll gladly pick up shares. If it was to go down to those prices, at the end of the day, Tattoo Chef's a $10 billion plus market cap long term. And so, you know, it doesn't matter if I buy at $1 billion, $1.5 billion. Sure, I would always love shares for the cheapest. I would love shares for the cheapest. But at the end of the day, in my eyes, where I see Tattoo Chef going over the next 5-10 years, it's a $10 billion plus company. Let's say by the end of this decade, it's a $10 billion plus market cap. So $1 billion, $1.2 billion, $1.5 billion, it doesn't matter in the end. All I know, it's kind of like when I was buying Tesla stock back in the day, where it was like, I would look at that stock and it was like, you know, on a split adjusted basis now, that the stock was 37, 38, 41, 44. Did it really matter? No, because I thought that company was going to become, you know, a massive multi-$100 billion company down the road. And now, shoot, it's almost hitting $1 trillion, right? And so it didn't matter. Like, I could have been very picky around pricing, but it didn't matter. Just flat out. Like, when you're in a great stock that has insane growth, and it's going to have insane growth for a long, long time in the future, it doesn't matter. If I buy Tattoo Chef at $1 billion, 1.2, 1.3, 1.4, 1.5, 1.6, it's all the same. I'm going to make a fortune in the end anyways. So, you know, that's my 2 cents there. I have no reasons to doubt, you know, the future there. And there's going to be so much money flooding into stocks like Tattoo Chef over the long term and flooding into the space, you know, and they're literally one of the leaders. And I've watched this company go from 2-4 SKUs in some of these stores to go to 20 plus SKUs in like that, like snap of fingers, you know, where do you think the company's going to be in 5-10 years from now? So that's why I picked up some shares. And, you know, if it follows a trend, it's going to likely, if it doesn't, sweet. I'll just pick up more shares for cheaper. I'll probably pick up call options, things like that. Next one up here, Voyager Digital. So Voyager Digital has gotten very, very interesting around pricing recently. And I got to say, the risk reward in this one is probably the most attractive I can find right now. Does it absolutely have risk because it's a crypto brokerage? For sure. But the reward potential in this one's crazy because the stock's fallen so much. It's around, I bought around $2,000, okay? Look at crypto. You know, Bitcoin is trading at or near all-time highs. Bitcoin's over 60,000 now. This is good. If there's a lot of trading volume in the higher and higher cryptos go, generally speaking, the more money Voyager Digital makes, as being kind of the middleman there. They make more and more money. So if Bitcoin was at 600,000 and the volume was even the same as it is today, or let's say it's even double, that would be ridiculously great for Voyager Digital. The more Bitcoin or any of these cryptos appreciate over time and the more trading volume, that is a good thing for Voyager Digital, a very good thing, okay? Ethereum is right at pretty much all-time highs, right? Very, very dang close. Well over 4,000 now. That is a great thing. Ethereum's, you know, something that tons of people are into, and you know, it's the second most famous cryptocurrency after Bitcoin, at least in my opinion. Some might say Dogecoin because that one went crazy last year. But this is the second most popular in my opinion. And if Ethereum keeps rising and the trading volumes are there, that means Voyager Digital's revenues and profits are going to be great. Okay, it's literally as simple as that. So I'm looking at all this, and Voyager stock has just been, you know, not in a good place. Look at this. I mean, Voyager is the number 31 most popular app on the entire app store for the finance community. That's huge. That is absolutely massive. Okay, number 31, you're pretty popular. Coinbase, this is trading at nearly an $80 billion market cap. You could make a very valid argument that Coinbase is undervalued, but anyways, trading about $80 billion. Voyager Digital trades at $1.5 billion. Like, you know, this one's risk reward is pretty nuts. It's not out of the realm of possibility for this to be a $10+ billion company within 2 or 3 years. Now, if the whole crypto market crashes and it stays down and Voyager can never become more than a crypto brokerage, you know, it's going to be tough sledding for this company. But outside of that scenario, I mean, it's literally possible this could be a $10+ billion company within a couple of years. So anyways, I'll put some chips on the table. We'll see what happens there, guys. Hope you enjoyed this video. As always, thanks for joining me, guys. If you are looking to join us in the private stock group, you're looking to scale up your portfolios, join us in there. We got a free 7-day trial going on. Check out pinned comment. Much love. Have a great day. Peace.